Hello and very good afternoon to all of you, and welcome to this live feed from me, Simply Stocks. Uh, as promised, live at 3 p.m. today, I am, and I'm here to answer all your queries. And apart from that, I'll also look at the markets as well as talk about some of the stocks. Before I do that, here's a standard disclaimer that this all will not be any stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Uh, so, how have you been all these 3 4 days? And a very good afternoon and welcome to all of you. Hi, Titi Chako, and hi, Jayesh. Hi there too, Sai. Uh, I was also doing the question and answer session just before that, and I was recording that, so that would be on in a couple of days. A lot of questions from a number of companies that have come up, and there are queries coming in order to support me through YouTube and this YouTube network. There is a way you can support me through UPI payments as well. In order to do that, kindly send me an email and I'll let you know the details. So that is one way that you can do it. I've set up a UPI payment transfer system so that you people, whoever wants to support me in any way, from 150 rupees upwards, can do that through that UPI transfer as well. Uh, Also, I'll be starting with a join thing on YouTube, a join button, but I'm just finalizing the modalities of it. Maybe by July, I'll definitely be on with that join button. Maybe before that. So kindly participate in uh, the poll that I have just put up there a few days back. Uh, so I'll answer all your queries, and I'll talk about the market. So this is how it will go. This live session. I'll talk about the markets first of all. Then I'll talk about two stocks, and one of the stocks would be Whirlpool of India. That's Whirlpool, and I like the stock at the current level, so I thought I'll discuss with you. Second stock that I'll talk about would be Galaxy Surfactants, and I do not usually talk about the chemical companies, but I'll talk about Galaxy Surfactants. And then after talking about stocks, I'll also answer your queries. Before I start this, I would like to remind you that the super chat feature is on your chat box. So use the super chat and super sticker ways, and that will help me grow the channel, and that will help you ask questions or queries in details from me, and I'll definitely answer that straight away. I hope you all are able to hear me pretty clearly and see me as well. So let's start the session. So let's talk about the markets first of all. The markets went up and down over the weekend. It closed around just below 9,100 or around that. And it looks like the market is becoming weaker and there is distribution taking place. So we could see levels of 8,500, 8,600 going forward in the next probably 2 to 3 weeks. That's my assessment. And we could have a situation where in the next 2 to 3 months, we could be in a position where the market falls more. See, the macro environment is not that right. So you look at whatever is happening on the ground with the number of cases increasing, with what is happening with the curfew situation, that it is open but yet people are not going out to buy things. Consumer sentiment is not that positive, and you may agree with me that the kind of buying that consumers used to do in shops, etc., and malls are not open. So take that aside, but the food joints are closed, the malls are closed, and the movie theaters are closed. So the most part of the consumer things of India, and where the consumers used to spend a lot and the prices were high, they are not going to. And with the fear of what is going to happen in the future, with the fear of whatever that could take place in the next 6 months with the economy in such doldrums, uh, we may have to pay more taxes, we may have to go through job losses, etc. people are going to save money rather than spend. So all this will be having a detrimental effect on many of the companies, and that's why I believe that the markets are set to go down from here rather than go up. Kindly write in the comment box what you feel about this statement, and what you feel about the fact that the market would go down or not in the next 3 months. I think by August we could be at least 10 to 12% down from what we are here. That's my assessment, and we have to be very cautious in terms of whether we should be buying into stocks in a manner that we believe that the market will go up. We should be buying into stocks only when we consider those companies are good, rather than buying into them just because we think that the markets will go up, so the stocks will go up. So the fundamentally, uh, per se, the stock, the company has to be in that bubble where it can perform really well, rather than looking at the markets on an overall basis. So that's my understanding of the markets. Let's now talk about the stocks. First of the stocks that I would like to talk to you about is Whirlpool. So Whirlpool of India, uh, established brand, currently trading at 47 times earnings, has fallen from around 3,000 levels all the way to 1800, 1850. Currently in a range, and the company is the leader in, you can say, washing machine and white goods, different kinds of white good products that they make, and they are a leader in washing machine and also refrigerators. They sell a number of refrigerators of two doors, single door refrigerators as well. And this condition of the current condition of a lockdown and everything else uh, has a lot to do with the numbers that would come in for Whirlpool. And I believe the numbers will not be that great. And over a period of next 3 to 6 months, I believe that the stock will remain in a range and may go down to something like 1500, levels, uh, which I consider would be very attractive to buy into if you have a 5 6 year time frame into the stock. The company has given stupendous returns. The company has given something like 25 30% year on year return since 2014-15, and has risen by leaps and bounds in terms of expansion, in terms of their sales growth, in terms of their expansion in the profit margins. So all in all, I consider that over the next 3 4 months, this is one stock that we can accumulate. And also, I look at the debt thing as well. And Whirlpool, uh, if you consider, is absolutely debt free, and this is another concern gone out of the window. So you won't have a concern with respect to whether the company is going to take up more debt, whether there is pledging, whether they're going to be in trouble if interest rates go up, and this and that. Just that consumer sentiments comes back probably in 3 months, 6 months time, these stocks will just run up. So Whirlpool and Asian Paints, etc. And being a market cap of around 20,000 crore, 23, 24,000 crore, it is not a very large company like a Godrej Consumer or a Dabur or an HUL, but yet it is producing very good numbers. It has produced very good numbers before. So at 24,000 crore, a very good mid cap company, that you would be having, a pedigree company that you would be having. I am not invested into the company, but if I would have had the money, I would have bought into Whirlpool for sure at these valuations. All right, the second stock that I want to talk to you about is uh, Galaxy Surfactants, a very interesting company in the chemical division, and one of the market leaders in the kind of reagents and colors that they produce for a different kind of consumer products. So what they do is they make reagents, colors, and powders, or you can say combinations, for products that are used in washing. So in washing clothes, I'm sorry, in washing clothes, washing powders, etc. They have marquee brands in coloring for the food material as well. They marquee brands in coloring for the paints, for other ointments, etc. and emulsions and so on and so forth. So they have a big gamut of different kind of industries that are linked to Galaxy surfactants, and company has produced very good return on equity of around 25-27% over the years. Also, it has had a very good record in terms of sales growth and profit growth. And if you consider on an industry average, it has always performed better than the industry. And with the kind of tailwind that the chemical companies are currently having, the stock has risen, but now it is consolidating. And that's why I feel this is a good time to get into something like a Galaxy surfactants at around 1300 levels can easily give you 100% return over the next 2-3 years. Uh, if things really materialize well, if these like consumer products start selling big time after 6 months or so, the stock should run up. That is my understanding. So at around 12-1300 rupees, Galaxy Surfactants looks a very good buy. uh, the holding of the DIIs, FIIs, as well as the promoter holding is pretty fine. And I would say that these two stocks, whether it's Galaxy Surfactants or Whirlpool, should be in one's portfolio who are looking for mid cap stocks that could do well. So why I want to tell you about these stocks, or why I would like to discuss about stocks whenever I come on a live session, uh, is because so that you will understand how to pick stocks, or which stocks to really pick and which to avoid. So basically, I avoid most of the highly leveraged companies, and I do not get into such companies at all. Thank you, Bloodbathi, for your contribution. Galaxy is well managed. I'm purchasing on dips. That's good. That goes. See, there are other stocks as well in the chemical space, and I've talked about them. But this stock is more like a consumer brand rather than just pure chemical. And the stock is, the company itself caters to all the consumer companies. So in that regard, you can play the consumer theme, uh, which has many large caps which are not performing well, with this kind of a company which sells to many consumer companies. So yes, it's a good stock to accumulate and have a good 5 to 6 year time frame. Thanks for your contribution, Bloodbath. So going forward, so why I tell you about these kind of stocks is that so that you can understand the psyche as to which stocks to pick for a longer period of time to make very good wealth. Many of you, 90% of you, would be doing a job, would be earning a decent salary most probably, and you'll be having good money to invest. So when you're putting in your hard-earned effort in offices, going to offices, coming back, and putting in all the effort, and then saving some money and putting into the market, don't look to be a cowboy. Don't look to make like 10x in 1 year and this and that. So let's buy, this stock has fallen from 100 to 10 rupees, it will go back to 100 rupees, so let's buy at 10 rupees. That doesn't happen, and that is a very dangerous thing to do, and that is how you get vanished in the markets. uh, Better to buy very good businesses that have been performing well over the years. Of course, some of them might not perform going forward, and that will happen. So that's why you buy 7, 8, 10 stocks, and 2, 3 do not perform. Let it be. The other seven will make you so much of money that you'll not worry about the other two or three, and you need to sell them off. So it's not that everybody buys, like even the big investors buy big shares, and they buy shares and they just go up and they make money on all the shares. It doesn't happen. Uh, 50% of your investments, or at least 30% of your investment, may just not work. And that goes for everybody, whether it is Ramdev Agarwal, whether it is Rakesh Jhunjhunwala, whether it is you, whether it is me, or anyone. At least 30% of your investment, 20 to 30% of your investment will not work, and you would have to sell it at loss, maybe 20% loss, 30% loss, 50% loss. So do not fear that. It's just that buy very good businesses, buy 10 very good companies, and let it be. And let's see what happens 6, 8 months down the line, two quarters, 3 quarters results, and then filter in your stocks. And then you arrive at 5, 6 very good stocks in which you're making a very good money. So that's how you need to go about it, and that's why I pick some of the stocks and just bring it to you. If you like my way of investing and everything, kindly like and subscribe to my channel, and like this live feed as well, and subscribe to the channel. I hope the subscription base and everything else go up pretty quickly. Thanks a lot, Saurav, for your contribution. Thanks a million. And if you have any queries, kindly shoot that to me. So that was about you could say Galaxy surfactants. Now about the both the industry. So before I answer your questions, and I'm here to answer all your queries as well. So just about 4 5 minutes for the industry, the consumer industry. So people talk about FMCG and consumer space. Uh, I look at consumer space in a more broader manner. It is not just about HUL, Nestle, Dabur, or Godrej Consumer. It is about a number of companies which could be directly related to consumers or indirectly related. So these chemical companies like RD Industries and Galaxy Surfactants are indirectly related to the direct consumer place. And then there are the Marutis and Eicher Motors of the world, which is again a consumer space in itself, which is known as consumer discretionary. But I believe there is simply that people buying into cars and bikes, they do go into buying cars and bikes, and that is a pure consumption play as NHUL. So as people buy into, yes, of course, it's not fast moving, and people do not buy into cars every month. The same person will not go ahead and buy cars every month. But uh, I believe that in a similar manner, like soaps or biscuits, people do get into buying cars every year, every 2 years, every 5 years. They do go ahead, and the cycle continues. So cars is one space, bikes is another space. Some of the chemicals are another. Some of the pharmaceutical companies are also quite like a consumer companies, because they cater to directly making you can say like advanced enzymes. They make enzymes for food products. So any chemical company, any pharma company uh, related to consumer companies are directly you could say an indirect consumer companies in itself, and this is what you need to dive into and analyze in order to find out. Thanks a lot to Chaco for your super sticker. Thanks a million. uh, so that is my opinion. So then what will happen is, why I'm saying this is that when you focus on one space, if you're good at understanding something like the space of commodities, and if you're good at finding out the commodity cycles, analyzing commodity cycles, then you just look at the commodity space. Do not look at consumer, do not look at capital goods, etc. Because remember, you need only one share to make you a millionaire. You need only two stocks to make you a billionaire, millionaire in the market of itself, and make you a big amount of money. You don't need to buy the whole market. How did you like the comment? Kindly write in the comment box, and if you like it, kindly subscribe to my channel. So that this is all about just looking at whatever is thrown at you in the market and whatever you're going to buy. Do not go ahead and buy everything. So that's my opinion. So now let's answer all your queries. And once again, I want to remind you that the super chat feature is on. So kindly ask questions through super chat. It will help me grow the channel. It will help you also eke out the detailed answers from me. And also visit my Patreon website. The link would be in the description of this video when I publish it. And you'll get a lot of things. And I'm changing the Patreon website altogether. So just to tell you in a minute, whatever is happening on Patreon. Is that in the $10 tier, so $10 a month, you pay 750 rupees a month, and you'll have access to my portfolio, you'll have access to my watch list, and whatever I do with my portfolio or watch lists, etc. So kindly visit that. Apart from having exclusive articles and videos and discussions with me, you can ask me one query a day on Patreon, so 30 queries a month with respect to stocks or the markets. So that's what you have with just a $10 a month fee. So visit Patreon, and I'm sure you'll get better services for the money that you'll spend. And if you have detailed queries on anything with respect to stocks or companies, you want to talk to me about markets, you want to talk to me on call, kindly send me an email and we can work out something with regard to the same. All right. Now coming to the question answer part and the questions that are coming in on the chat. So first of all, so there's a question on Aarti Industry. How Aarti Industry is a very good company. You should invest into it, and it should give you very good return, just like Galaxy Surfactants would. Polycab is good, but the problem right now, whatever it's facing, I believe that the problem is Polycab with Polycab is that their business is more or less settled around Maharashtra and Gujarat, and that is the basically a biggest hit states in India with respect to the disease, and so. The business will be severely hit. That is what the market is thinking, and that's why I believe that the stock is not moving. Otherwise, the company looks quite good. If there are any corporate governance issue or something else, then I'm not aware of it at the moment. FL India is good. They have again acquired, not quite acquired, but they are into a lot of talks in Europe again with other companies. And the stock has moved up from those 1300, 1320 levels all the way to 1500. The results will be out in a week or so. Uh, it is a good company to invest into for a longer period of time. FL. Ujjivan is a complete avoid. SBI cards at 500 is a buy for me. If I were you, I would buy, and I would buy on any declines towards the 400. It could go to 400 as well. The results have not been that great, but it was expected that the results will not be that great. So next two quarters will be tough. We could see 400 on SBI cards. We might not, but you need to buy on each major dip on SBI cards. Okay, so F specialty chemicals versus FMCG. What is my view? In pharma, my view is this that next 2 years could be good and you could make good amount of money, but next 1 or 2 years, and that's just about it. Maybe only 1 year. And you need to keep shifting from pharma IT to FMCG and consumer names if you want to make money. Otherwise, you'll be stuck in pharmaceutical companies. In terms of chemical companies, I think there is still a fair way to go in some of the chemical companies, but not all. And I've talked about many already. So that is my view. And in FMCG, it is an evergreen sector. So probably any dips in major FMCG brands are very good opportunities to buy into. Pidilite is a good company. Keep buying if you have not bought into, buy into it. If you are already holding it at higher prices, average it. It is one of the best companies, Pidilite, of the stock market. Okay. Okay, so Pfizer is pretty good. It is one of the best MNC, you can say, pharma company, and they provide all those drugs for Alzheimer and cancer, etc. They are, in a sense, quite a proxy to whatever volatility that is happening in the market. So you can keep on accumulating. Pfizer can give you good 14 to 16, 17% return year on year in that regard. Kilpest, keep holding if you have bought into. Do not buy a fresh at 180, 200, but if you have bought into Kilpest at lower levels, keep on holding. I believe the results would be good. Waiting for the results, and especially results of June quarter, which would be in somewhere in August, that is believed to be pretty big, and that is why I am also holding on to the stock. So yes, it is a hold at the moment. All right. Thanks a lot, Titi Chago, for your contribution. Why should we shift out of IT to FMCG? I believe the play in IT is just because of the currency rather than the structural play per se. And if you believe that the currency is going to continuously go up, if you believe that the Indian consumer story is not going to pick up in the next 2 3 years, yes, definitely get into IT and stay with it. My understanding is, in after the next 6 months or in the next 6 months, you would have a situation where the market may start finding the consumer names better placed, and by consumer I mean many of the other stocks rather than the pure FMCG brands like the Whirlpools of the world, and they would buy into it. So that's why I don't like IT that much for a longer period of time. Okay, so thanks a lot, Sai, for your contribution. The Grop Tea, interesting company. I have looked at it earlier as well, but I would say it should be an avoid. There are many things with respect to the management that I find difficult. Although the company has performed decently, if you are holding on to it, hold on to it. If you have not bought into it big, do not average or buy into it. I believe you get into marquee mid cap or large cap companies, they will perform well even going forward from a longer period of time. VST industry. So VST industry is an avoid, as is ITC for me. There are many people who are gung ho about ITC. I think one should avoid ITC at these levels. Yes, at around 130, it looked attractive, but around 200, once it goes to 200, 220, I think the move is done, and probably it will again go back to 150, 160 levels. So you'll be caught at the top in that ITC rally. Please advise on Sudarshan Chemicals is a very good, you can say, pure chemical company. Yes, the stock has not done well over the next, say, 1 2 years, but keep holding it, and I don't think it will make you a lot of losses. I think the move in Sudarshan Chemicals happened in one go, so it could take just 3 months for the stock to double or something like that to go up 50 60%. And so just hold on to it. It is a decent company. Promoter is pretty good. That's what I believe. The company is good. Tanla Solutions, in my opinion, is all set to move up, and that's what I put up a post. So, technically speaking, I'm quite bullish on Tanla Solutions. It has remained above 60 for some 2 3 4 weeks, and that has not happened earlier. I mean, things have got very jittery when the stock used to trade above 65 70. So technically speaking, I see a move to 90 95 levels. I see new highs being made in Tanla pretty soon, and that's my understanding of the stock. On a fundamental basis, the company is good. I believe this year's EPS will be close to 10 rupees, and next year's EPS, that is FY21 EPS, could be close to 15 rupees. So we are getting the stock at only 4 5 times FY21 earnings. That is my understanding. Let's see how the results go. Let's see whether the company reduces and completely abolishes all the uh, depreciation with this quarter, and then FY21 has a clean slate and we'll see profits coming in on the bottom line. So we'll see that on Tanla. I would prefer Adani Gas compared to IGL because of the kind of numbers that they are producing and being a smaller stock. Webhub Global is good, so kindly hold on to it. Graphite and HEG, see the products that they're producing, the prices have gone up, and so they're selling at a higher price, and that's why the stock has moved. There's a demand for the graphite electrode products in the global market, and that's why the stock has gone up at the moment. Thanks a lot, Bradwati, for your contribution again. And surely I'll definitely try to be online twice a week to answer your queries. Thank you. L&T is good, but I think over the next 4 5 years, it would be better to be in pure consumption rather than capital goods sector, because see this sector, when it does well only when there is a boom in the economy and there is a total dullness in the economy, and we are in on the brink of a recession. I don't think L&T will perform at all. Okay. Why HUL is not moving? I don't know why HUL is not moving. I think HUL will fall more. The way it has fallen below 2000, we could see 1800 levels on HUL. Uh, Probably these are very good levels to buy if you have a 5 6 year time frame. So in that regard, yes, buy into it for a period of 4 to 5 years and just hold on to it. It will give you very decent returns from these levels. Normally, HUL gives the 14, 15%, 13, 14% return. And this time around, you could have a 18 to 20% return from these valuations on the large FMCG or large consumer companies. All right. Healthcare mutual fund. Interesting. Well, I can tell you about healthcare stocks. I don't go to the route of mutual fund. In healthcare and diagnostics, we have Kilpest that I've talked about many times. Then there's Dr. Lal, Thyrocare. You can look at Metropolis. They're they're very good diagnostic companies that you can look at. You can look at Apollo hospitals as well. But in Apollo hospitals, I want to give you a one caveat that the management, I guess the management stake is pretty low. I'm not sure, but that's what I saw. And the second thing is there are pledging of shares, some pledging of shares in Apollo hospitals. Sai, thanks a lot for your contribution. AstraZeneca is a good stock to invest into. Uh, it had issues of US FDA, it had issues of some bans of their products 4 or 5 years ago. It has all gone. If you have not bought, probably wait for declines to get into. But these are stocks like Pfizer, AstraZeneca, etc., from a 6, 7 year time frame, not 1 or 2 year time frame. Avoid VRL logistics or any logistics stocks for the moment. But see, both Divi's and Dr. Reddy's, any decline 10-12% from here, anything closer to the 50 DMA, between 30 and 50 DMA, would be best to buy into these pharma companies. They are not going to fall a lot. So, any 4-5% decline in a day, that's a sudden decline, and you can just buy a few shares and keep on buying on major declines. Alembic Pharma is a good stock, very good company. Decline should be bought into. Is one of the best companies in the pharmaceutical, but it has run up a lot, around 800, 850, I guess it is, or maybe it has crossed 900. So the run up has been very sharp. So wait for major declines in the pharma sector to buy and have a 1 to 2 year time frame to exit. Do not hold on to pharma or IT companies for too long because you'll miss the rally that would come in the consumer space. All right. So that was about Alembic. IRCTC. Interesting that IRCTC is now moving up again, and the news that the passenger trains would work and so on and so forth. From a 4 5 year time frame, these are very good levels to get into IRCTC, and probably you could see levels of beyond 2000, 2500 in a couple of years time, but not from a 6 7 year time frame, because if the government starts to have open bids for trains as well, we don't know. I mean, if they go ahead with all those things of privatization of this space, then the monopoly of IRCTC would be hampered. Vanke's is a good stock. I think Vanke's with its kind of product range is good. The stock has fallen. You can accumulate, but the problem with Vanke's is it is like a commodity play because of the major product being eggs, and they sell eggs and the egg prices goes up, Vanke's goes up, and when the egg prices are down big time, or they people not using eggs or chicken, then the stock go low as well. So all these things need to be taken into consideration before buying into Venki's. IOL Chemicals is a good stock, so one can hold on to IOL Chemicals. Both Marico Tata Consumers are good. Tata Consumer is a better stock comparatively. All right. See, I don't know much about the mutual fund space, so I do stocks. I analyze stocks individually, and I share my views with you, whatever I feel like. So I'm not an real expert. I'm just like you. It's just that I analyze stocks for a longer period of time. Just that. Thanks a lot, Vishnu. Eid Mubarak to you as well. DMart at 2400, 2300 is expensive. Their results would be out, I think, today, tomorrow. I think they might be out. I didn't look. A decline to 1800, 1700 levels are better to buy into. At current levels, if you buy, you have the risk of having the stock go down 20% from here. Reliance is good. Reliance is good at these levels as well. Till 3rd June, it is going to be under pressure because of the rights issue. These are good times to buy the Reliance share, not the rights, and probably hold on to it for 5 6 year time frame. I believe their geo business and whatever technology business that they have, and this tie up with Facebook and others, this is going to go a long way in changing the facet of Reliance over a longer period of time. So the valuation stream, the valuations parameter will change. It no longer would be judged as a company which is into oil and gas, but it would be more a technology company into internet and mobile technology. Thanks a lot, BVS, for your wishes. A polycab, if you're holding, then kindly hold on to it. I've talked about polycab earlier as well. But if you have not bought, then just wait for the results. How do they go, and the result reaction, and then take a call. Tasty Bites is very interesting at 9,000 levels. 8,000 to 9,000 levels are very good levels to buy into. I believe over the next 5 to 6 years, it can easily get to 10, something like 20 to 23,000 easily. But then again, look at the numbers and do a deep research and only then get into the stock. I like MGL more, Jagjit, rather than IGL. Avoid Mahindra Finance and avoid all financials, as I always say. All right. Bharat Rasayan is a very good chemical company. I'll definitely make a video on Bharat Rasayan going forward, but kindly hold on. Aurobindo Pharma in the pharma is good. With its one of its major plant in Andhra Pradesh getting the approval, it would do really well in US market. So Aurobindo is a buy at these levels. Zydus Wellness is also good to buy and hold for 8 to 10 years. It is again one of those stocks like Pfizer that just hold on for 8 to 10 years and mint money, just like NTPC, etc. Galaxy is good, but there are other, you can say, new age IT companies that I have always talked about that you can go ahead and invest into. All right, guys, thanks a lot for being online, and kindly subscribe to my channel and hit the bell icon so that you can get my videos straight away when I post it, and I'll be on live feed again soon. Thank you.